Hello dear students, welcome back to Bhavani Commerce Academy. In the last class, we discussed format of journal entries, yes? And now today's class is practical problem on journal entries. And very important class. If you want to understand these journal entries, you have to know rules of double entry system. If you don't know that rules, then go to rules of double entry system class that is given in the description box. Listen carefully, then come back to this video. Okay, let's start our class. And first question is, for the following transactions, write journal entries. So if you want to write journal entries, first you need to draw the journal entries format. So what is the format? Already we know that format. 5 columns we have in that format: date, particulars, LF column, debit column and credit column. Okay, so what is the first one? August 1st, 2007, business commenced with cash rupees 25,000. So here business started with cash 25,000. Who is starting business? Owner is started business with 25,000 rupees. So in this transaction, already we know every transaction have two aspects. One is debit aspect, other one is credit aspect. What are the two aspects? First we need to identify. So from this transaction, one aspect is cash, other one is capital. So capital ani ela cheptamu? Capital is the amount invested by the owner in the business. So ఒక బిజినెస్ స్టార్ట్ చేయాలి అంటే మనకు కావాల్సిన అమౌంటే ఇన్వెస్ట్మెంట్, దట్ ఈస్ నథింగ్ బట్ క్యాపిటల్. ఓకే, సో హూ ఈజ్ ఇన్వెస్టింగ్ దట్ అమౌంట్? ఓనర్ ఈజ్ ఇన్వెస్టింగ్ దట్ అమౌంట్. Okay, so that is nothing but owner's capital. So what are the two aspects here? Cash and owner's capital. So owner's capital and cash. So which one is debit, which one is credit? How to identify? It's purely depends on rules of double entry system. So these are the 3 rules: personal account, real account and nominal account. What is personal account? Debit, the receiver; credit, the giver. If the person receives the benefit, that is debit. If the person gives the benefit, that is credit. Okay, like real account, what comes in debit, what goes out credit. It is related to assets. And nominal account, it is related to expenses, losses, incomes and gains. All expenses, losses debit, all incomes and gains credit. Okay, see, in these two aspects, which one is debit, which one is credit, we need to identify. Okay, owner's capital. Owner is a person, natural person. So it is a personal account. What is the rule of personal account? Debit the receiver, credit the giver. So owner is the receiver or giver. For the business purpose, owner is investing money in the business, so that he is a giver. So he is a giver. So giver's account, debit or credit? Giver account is credit, so it is credit. Clear? And cash. So cash is a asset. So according to real account is related to assets. What comes in debit, what goes out credit. So business point of view, cash is coming into the business because owner is the giver. Okay, here we are following business entity concept. While recording the transactions in the books of accounts, should be noted that business and owner are separate. Okay, all the business transactions are recorded in the books of from the point of business only, not from the owner point of view. So according to that, what comes in debit? Cash is coming into the form, so this is debit. Okay, so how to write this entry? First we need to write debit aspect. After that we need to write credit aspect. Okay, see, what is the debit aspect here? Cash. Cash account, debit, dr is nothing but debit, and give some space under the cash and write 2. Then you need to write credit aspect, that is owner's capital. Owner's capital account. Okay, so after writing this debit and credit aspects, you need to write narration in the bracket. What is that narration? Explanation of this transaction. Okay, so what we should write here? Being business started with cash. So this is the narration, that is the explanation of this transaction. And what is the date of this transaction? August 1st, 2007. So first we need to write year, then month and date. Okay. LF column, here we will not write anything. And debit. What is the amount of debit? 25,000. Okay. And here we have credit amount 25,000. Debit is always equals to credit. So this is the journal entry. Okay. Close this entry. So see here. Here is our answer. Cash account debit to capital account, being business commenced with cash with 25,000 rupees. Okay. And next, August 3rd, cash sales 2,000 rupees. From this, you have to identify two aspects. One is cash, other one is sales. Okay. Cash, sales. Which one is debit, which one is credit? How to identify? It depends on accounting rules. Okay. So, cash, it is an asset. Yes. Asset is a real account. What comes in debit? What goes out? Credit. If you are selling goods, you are receiving cash. Yes. So ఇప్పుడు ఏదైనా సేల్ చేసినప్పుడు మనం క్యాష్ రిసీవ్ చేసుకుంటాం కదా. So business is selling goods. So business is receiving cash. So what comes in debit? Cash is coming into the business. So it is debit according to real account rule. And sales. Sale is a income. Sale is a income. Income is always credit because all expenses losses debit according to nominal account, all incomes and gains according to nominal account, it is credit. Okay, so income will comes under credit. So how to write journal entry? First we need to write debit aspect. What is the debit aspect? Cash. Then we need to write credit aspect, that is sales. So cash account debit to sales account. See here. Cash account debit to sales account. What is the narration? Being goods sold for cash. Clear? And next one, cash purchases. So here we have two aspects. One is cash, other one is purchase. Okay. So from business point of view only we need to think, because we are following business entity concept. Yes. So business is purchasing goods. Okay. At the time of purchasing goods, cash is going out. Yes. So what comes in debit, what goes out? Credit according to real account. Cash is a real account because it is an asset. So what comes in debit, what goes out? Credit. At the time of purchase, cash is going out. So it is credit. And purchase. Purchase means we are at the time of purchasing, we are spending some amount. So it is an expenditure. So expenses will comes under nominal account. Expenses will comes under nominal account. So nominal account rule is all expenses losses debit. So purchase is debit. First, how to write journal entry? First we need to write debit aspect, then we need to write credit aspect. So purchase is a debit aspect, cash is a credit aspect. Now entry is purchase account debit to cash account. See, purchase account debit to cash account, being goods purchased for cash. Clear? And next, rent paid. So here, what are the two aspects? Rent and cash. In the form of cash only we are paying rent. So rent, cash. Okay. So rent is a expenditure. Why? Because we are paying that rent. Okay, so expenses will comes under nominal account, that is debited. Yes, so always it is debit. And cash, at the time of paying rent, cash is going out. So what comes in debit, what goes out? Credit according to real account, because cash is an asset that comes under real account. Real account rule is what comes in debit, what goes out? Credit. So it is credit. So how to write entry? First debit aspect, then credit aspect. Rent account debit to cash account. See here. Rent account debit to cash account. Clear? And the next one, rent received. rent received. So here two aspects are rent and cash. Here also same, rent and cash. But here rent paid means cash is going out. Here rent received means cash is coming into the business. So it's an asset. It's a real account. So what comes in debit? What goes out? Credit. At the time of receiving rent, our cash will increase. So if asset increases, what happens? That is debit. Okay. And rent. So here rent received. What is that? Rent received. Rent received is nothing but income. Income will comes under nominal account. So all expenses losses debit, all incomes and gains credit. So incomes and gains, what we should do? Credit. So it is credit. How to write journal entry? First debit aspect, then after you need to write credit aspect. So what is the entry here? Cash account debit to rent received account. Once you check that, cash account debit to rent account being rent received. Clear? And next one, discount allowed 600. So what are the two aspects here? Discount allowed and other one is cash. Okay. So here discount allowed is a loss. So ఎందుకు లాస్ అని చెప్తున్నాము? Business point of view, business is given discount to customer. So it is a loss. For example, customer have to pay 10,000 rupees, but business given 10% discount. So customer will pay 9,000. So 1,000 is a loss for the business. Yes. So that if it is a discount allowed, that is the loss of the business. And loss will comes under nominal account because all expenses losses debit. So it is debit. Next, cash. Cash is a asset. Yes, asset is a real account. So what is the rule of real account? If the asset increases in the business, that is debit. If asset decreases in the business, that is credit. So if you are giving discount means our cash value reduces. So it is credit. So now debit aspect first, credit aspect next. Discount allowed account debit to cash account. So discount account debit to cash account. And next one, cash received from Hanumantu. So here two aspects are cash and Hanumantu. Okay. So cash is a asset. Asset is a real account. So business point of view, we have to think, yes. So cash received from Hanumantu. So Hanumantu nunchi manamu cash receive చేసుకుంటున్నాము. So cash is coming into the business. So what comes in debit? What goes out? Credit. So we are receiving cash means what comes in debit? Cash is debit. And Hanumantu is a person. So it is a personal account. What is the rule of personal account? Debit the receiver, credit the giver. So Hanumantu is a giver or receiver? He is giving amount. So he is a giver. So giver's account, credit according to personal account. So how to write entry? Cash account debit to Hanumantu account. Because debit aspect we need to write first and credit aspect we need to write next. So cash account debit to Hanumantu account. So cash account debit to Hanumantu account. Okay. And next one, cash paid to Rohit. Here two aspects are cash and Rohit. Cash paid to Rohit. So in this transaction we have cash and Rohit, two aspects. So business is paying cash to Rohit. So Rohit is receiver. Rohit is receiver. So receiver means personal account. Debit the receiver, credit the giver. So he is a receiver, so he is debit. And cash is an asset that comes under real account. What comes in debit? What goes out? Credit. So cash paid to Rohit means cash is going out. So it is credit. So how to write entry? First debit aspect. Rohit account debit to cash account. See here, Rohit account debit to cash account. So this is the process of writing journal entries. So if you understood journal entries, share this video to your friends. Thank you for watching.